Welcome back to CoinScrum Markets for another episode of Crypto RFQ. I'm Teana Taylor-Baker, and I'm delighted today to be joined by Anton Golub from Flowtech. Anton, thank you so much for joining us.
It's a pleasure to join, and thank you for having me. And it seems like each time I am on CoinScrum, there is a new all-time high. So looking forward to continuing this transition for many more years to come.
I love it. Maybe you're the lucky charm. Yeah, so at the time of this recording, we have hit a new all-time high of $51,000 for Bitcoin. Very exciting for Bitcoiners and anybody in the crypto space. So, yay for us. Long may it continue. So let's dig into a little bit of the market news this week. There's been quite a lot of activity rallying around the Bitcoin price and or potentially driving the Bitcoin price, I think. We'll see what you have to say. But let's dig in a little bit about corporate treasury purchases. So there's been the most notable, I guess, is Elon Musk taking a large position in Bitcoin to hold on his balance sheet. We've seen a stream of announcements of other companies that have decided to allocate positions or are talking about allocating positions and not in insignificant amounts. So, it wasn't that long ago that we were looking at single-digit million-dollar orders that could move the market on exchanges. But are these larger buy orders, how are they being executed and filled in a way that isn't, moving the market in great swings that we would have seen previously? And what's the impact of this corporate treasury activity having on the market overall?
Yeah. So just to start with a strong statement, I think every week when Elon Musk purchases some crypto is a good week for our industry. And I hope this week is at least Jeff Bezos with Amazon. So, but putting that statement on the side, I think it's very important kind of to emphasize and also demystify the process of how these actually purchases are done, because I think they kind of come out of nowhere and people think they actually are executed very, very fast, but this is usually not the case.
Yeah.
Especially in the context of the publicly listed companies, I just want to kind of explain to the viewership, actually, this is a process. It first starts actually with the board of directors approval. So actually the management has to approach the board and actually discuss and get an approval for any kind of strategic allocations within the corporate treasury. And that happened as well in the case of Tesla and MicroStrategy, Square, and so on. So the first step is actually to get board approval. And I'm sure that, you have usually legal and compliance experts there. They raise their hand how these purchases are going to be executed. Is a very well-defined process once the board of director approval is there.
Right.
Talking about these big purchases, actually, obviously, even doing a sizable trade in the crypto markets, which are still very young, very immature, and very illiquid, would massively move the price. So
right.
Way they are executed there is actually to split these big trades into many, many, many small trades, and then over time, through algorithmic means, acquire Bitcoins by purchasing them across many different trading venues, meaning exchanges, and also with many different over-the-counter trading participants.
Yeah.
Again, all in a very strategic, slow, balanced environment, because as we discussed this, if there would be strong buying pressure coming towards these exchanges and trading venues, the price would move even stronger than we see now. And I think in terms of this process itself, Square did us all a favor because they actually published a white paper that explained pretty much the process, actually how I described them now, that it's actually an algorithmic execution. And once the Bitcoins are actually acquired, they're moved out of the exchanges, they're moved out of the domain of the over-the-counter trading venues and put in cold storage. And then they sit there, they're not sitting actually on exchanges. So this is kind of how it would be the process. And finally, because Tesla and MicroStrategy are publicly listed companies, they have public disclosure requirements, and they had to actually disclose. So that's why we know about it, which is good.
So two questions I think that come up often when I've had conversations, specifically around Tesla and other companies like them. How long does it take to fill these orders? So if we go back a couple of years, if you were going to do $1 million buy into Bitcoin, you might have to do it over a week, right? So that you do it in these small tranches, because if you buy it straight away, the price is just going to go up, and you need to do it in increments so that you're not causing some kind of, market fluctuation that in the end means you're paying more than you intended, right? So that's my first question. How long is it taking? And then number two, can you explain for our viewers why a company like Tesla, why this isn't a short-term investment? So a number of people are wondering, well, the price is going to go up and then Tesla's going to trade out of it. And I'm explaining to people why that isn't the case, why taking a balance sheet position is different than swing trading, for example. Can you just go into that a little bit?
Yeah. Yes. Yeah. So first, now reflecting on the time horizon that this needs to be executed, I can just say with confidence that usually to execute on a daily basis, a trade between a 50 to 100 million is actually quite feasible in the current market environment. So if you just kind of break that down and say, okay, Tesla did 1.5 billion, we basically divide that by pretty much 10, you realize kind of over a period, if they really went full Monty and tried to acquire 100 million Bitcoins per day, that would kind of take 2 weeks, maybe a bit longer. So this is something that we would kind of have as a feasible solution. But now the markets are not naive. There are people there who trade are very, very clever. If they see constant buying pressure over several days or even weeks, that's actually a clue or a hint that something is going on. And smart traders or proprietary traders, hedge fund, will jump on that, and they will actually try to ride that wave as a big counterparty is purchasing. So it's a very delicate balance between doing it in a balanced way, but also not taking your time too long, because you're just obviously telling to the wider market what are you going to do. And from strategic point of view, would like to actually to buy as the price is going down, because this is in your favor. You would like to acquire on the what we colloquially call in our industry the dips or the drawdowns, and not as the price is skyrocketing upward, because then you're chasing the market.
Right.
So this is kind of my experience, what is feasible. But going forward, I think that if bigger companies get involved, this will be a crowded space, and we can actually expect also quite volatile price movement in the coming time period from a context of short-term price action.
Okay.
Now, moving towards what is the rationale, why companies would actually want to allocate part of their treasury. First, also going back to the discussion that we had, these kind of decisions are decided on a board level, and these are strategic decisions. And usually the rationale about them is to very plainly to diversify the corporate treasury, because if usually the treasury is actually managed from a risk perspective, not from a proprietary trading perspective, meaning that the finance departments and the CFO, together with the leadership of the company, are looking how they can diversify their corporate treasury, taking account of the risks around the macro situation, about potentially situations where there could be dislocations in the currency markets. And likewise, also thinking about the long-term future is where we can actually most efficiently allocate part of our treasury to actually benefit from that. But on a long time horizons, which are several years or decades, and not definitely in the domain where the proprietary traders or hedge funds are. So this will be my input.
Perfect. Great. Thank you for that. I think that's really important to clarify for people who are thinking that this is, a short-term trade, and it isn't, right? And putting some of that context around it, I think, is enlightening for a lot of people. Okay, so let's move on to some other big news around the ETF application in the US. So what might success mean for Grayscale in this ETF space? We have been talking about an ETF in the US for years and years and years. The SEC, in my understanding, has had some concerns about market integrity, for first and foremost, before issuing, the permission for a US ETF. What do you think is going on in this space?
Yeah. So when I look at this news and this attempt and kind of reflect on it on a global scale, it's quite surprising that pretty much one of the only financially developed countries out there doesn't have a exchange traded product or exchange traded note or a trade traded fund, however you want to call it, is actually the United States. Yeah. So if I have to kind of zoom out of that, this is my personal opinion. I think it very much revolves around confusion on the regulatory side, who really wants to actually be responsible for the cryptocurrency space. So kind of we said, well, the CFTC thinks it's its domain because there's a futures market at the CME available for trading Bitcoin futures. Then you kind of also have SEC who takes a very close look at it. And finally, you have the financial controller who actually looks at it from a money transmitter perspective. So
Right.
a lot of players here who are trying to figure out, well, whose turf is this? So this would be my actually statement to say, why is it that not available? Because we're talking about Switzerland, we're talking about Sweden, Canada. I mean, all over the globe, you have exchange traded products that give exposure to cryptocurrencies. Now, in the context of Grayscale, in my humble opinion, the reason why they had such huge success is because they correctly anticipated there won't be an ETF in the US markets for many years. If you recall, Grayscale started in 2014 with a microscopic AUM as the price was growing, but they identified a need for a product that gives exposure to cryptocurrencies, that actually removes the problems around custody, because usually the funds have a very clear process who can be a custodian of the asset that they buy. And if buying cryptocurrencies directly, they would not have a regulated custodian to handle that. Meaning Grayscale correctly identified this gap, went out with their product, and it was highly successful because it's the only one out there. Very, very clever. Now, you correctly said it, the worry from the regulator is market integrity, because most of the spot futures and derivatives market in the crypto world happens on exchanges that are officially offshore.
Right.
And in my view, the biggest concern, and it was stated several times, that this is the concern from the regulator, and that's why they are cautious about it. I think that's actually well thought through caution from the regulator, and the stronger the markets, the spot markets, especially in the developed countries are, and kind of as they grow compared to the offshore trading markets, the stronger there will be the case for a crypto ETF in US. Hence, let me put my word out there. I don't think we will have it this year if the status quo stays as it is.
Okay. So just building on that a little bit. So market integrity, I think, is probably, in my personal opinion, going to be, the next area of friction with regulators. We've kind of solved for, if you will, the AML concerns that they've had, and a number of jurisdictions have regimes in place that crypto companies need to adhere to, which addresses that risk. And then I think the next big area is this market integrity piece, and we've seen in different jurisdictions regulators addressing that and potentially putting in place language in their guidance. Gibraltar is one. I think it's also included in MiCA, which will affect all of the EU jurisdictions. But in the US, there isn't that clarity around market integrity specifically for crypto asset markets. Do you think that's something that needs to be put in place? Is there something the industry can do to start operating to a certain standard that would alleviate concerns? Or, are we just kind of stuck at a roadblock?
Yeah. So I think especially in the correct light that you stated it, I think really the big benefit of the cryptocurrencies, why they managed to evolve so fast, is because in many jurisdictions globally, they're actually quite unregulated. And I say this from a negative perspective. For instance, in Switzerland, cryptocurrencies Bitcoin is considered like yen or sterling or euro. Great. Isn't this great, right? So we can move forward very fast. But it's not in the domain of the securities laws. And right. It's a bit tricky. Okay, what does market surveillance mean in that context? How do we deal with not legal activities like wash trading? Who manages that? Where is the volume actually happening? Where are the markets really flourishing when they're not? And I think this is really a big conflict on our side. On the other side, it's great that we don't have this strict requirements, and we can exchanges can list utility tokens and people can trade them, which is a completely weird concept in the securities regulation. But on the other hand, then all the rules and the regulations that put the regulator in comfort are not there. So hence, for me, this is really a tough situation. And I think, history has proven that when you need to have a flourishing, innovative environment, the more regulation you put, the more you kill it, actually. So I'm really curious how this will play out. And hopefully it will be organic growth from our industry, where the volumes and the trading and the activity will flourish on the onshore trading venues. And maybe the ones that are not doing things the best way, maybe that's part of the history.
Indeed. Yeah, that's certainly one approach. Okay. So you mentioned earlier custody, being able to give customers exposure without the headache of custody. But in recent news, we finally do see the institutions coming into crypto, but maybe not in the way that we thought. So Boney announced that they're going to offer BTC custody for its asset management clients. And JP Morgan is also, making some nods toward Bitcoin, stating that they're going to get involved. What do you think these announcements and or offerings at that institutional, financial institution, not a non-financial institution, has impact-wise on the market and confidence?
Yes. So I think everything that you said now is really a great validation of our industry, really amazing achievements. And now to throw in a bit of my experiences, I remember in 2017, I spoke with one of the investment banking individuals. He said, Anton, when this becomes 1 trillion, then our clients are interested. But we have to start preparing when the market is 500 billion. And what was mind-blowing to realize is that actually today we're at 1.4 trillion crypto market cap, meaning if you kind of reflect on it, the preparations for that are backed now by these statements started maybe even a year ago for a lot of big entities. And I'm sure you have seen the same thing behind the scenes. You know that actually a lot of things is happening and a lot of things have been happening since the summer time period last year. And here in Switzerland, we're a bit spoiled because we have 2 regulated crypto banks, digital asset native banks, Signum and Seba. And kind of, when they involved and when they got their licenses, that a lot of things were happening behind the scenes. So I think custody is the first step. Literally, this is the first baby step for any traditional financial institution. Is just like if our clients buy it or we buy it on their behalf, where does it sit? Who safeguards it? Who safekeeps it? And this is really also, it tells you how early it is if the first baby step is actually a big achievement for the traditional finance. So we are a long way to go. But again, what I see happening behind the scenes is amazing. This is going to be a great ride. The bull run has just started, and and I think a great validation. We remember the strong statements from the CEO of JP Morgan quite a few years ago. How
right? Bitcoin's a scam. Bitcoin's a joke. Yeah. It's incredible. It really is incredible. And, I think for a lot of those long-term investors and certainly, our Bitcoin maxis, this is very encouraging to see. I think what they view as people kind of seeing the light, right? And it's only a matter of time if we all kind of hang in there. So I just think it's a reflection of, as you say, the market cap growing to a point where it's being taken seriously. And I think that's from both the market players, market participants, as well as regulators. And I remember having that conversation with you back in 2017. And we were talking about, what it was going to take to start to get some of this institutional volume in, to not just drive the price up, but to add some stability to the market. And it's interesting that, 3 years later, well, almost 4, we're now starting to see that come to fruition.
I think it's, again, I'm reflecting on our conversation in person that we had together. So it was a long time ago. And also, just to say is that the asset class, it can be now considered an asset class. It's big enough for big players. It's a great validation for everything that we do. The work has just started and I couldn't be more excited. And likewise, to really say, to add to the solidity to our ecosystem, we need strong players like CoinScrum, like FluffTech, actually, that provide actually high-grade services and really do our industry and our ecosystem a benefit, because it's out there and it cannot be stopped.
It can't be stopped. I agree. Anton, it's always great to chat to you, and I'm delighted to see you. Tell our listeners how they can learn more about you and get in touch with you and FluffTech both.
First, thank you for having me. It's really a pleasure, and thank you for your friendship for this many years. And I'm very active on Twitter, where I follow CoinScrum usually, and people can reach out to me there or at email anton@flofftech.com. I'm looking forward to discuss the exciting opportunities that we're seeing in our industry and our ecosystem. So thank you for having me.
Brilliant. It's always a pleasure. It's great to have you. See you next time.